The difference between trading and gambling is that as traders, we can use a wide set of information to make better decisions. Now, if you're like most traders, you wake up right before the bell, hop on the charts, maybe eat a piece of toast if you're lucky, and then you chase the move after it's already happened. Now, I'm going to show you a 3-step process for determining a directional bias, sometimes known as a daily bias, before you even step foot on the chart. We're going to go over a real example of how we do this by mastering this one candlestick pattern. We can see that I'm up about $1,000 on the session. Now, this isn't just for today. This is an account that we started last week. We're up about $2,000 in total in about 3 trading days, as you can see. Profit factor shown here. And what I really want to get into is our directional bias, which I'll go ahead and show you over on TradingView. If you look here, I always want to start with the highest time frame in mind. So I'm going to look at the daily for my specific trading style. Now, what we formed here is pretty simple. We ran out an old high, otherwise known as a breakout, and we're seeing a slowing of momentum on these candle closes. We see that they do not want to close near the highs, and in fact, all of these candles are now underneath their opening price. This gives me a directional bias heading into the week, because we can see right here on today's session, we have a swing point just to the left of it, and then sequential lower highs on a lower time frame. Now, how do I use this information right here? You might be asking, how do I use this one candlestick pattern to make money? It is a very simple process. It's called using the previous day's range. Now, you might be familiar with using a prior day high or a prior day low. That's perfect. But what happens when you take the middle of those 2 points? Just the halfway point, right? The 50%. If something's going to be bullish, it might want to close over the 50%. And conversely, if it's bearish, it might want to close under the 50%. So you can think of that level as the last line of defense. In a lot of scenarios, obviously you can have an optimal trade entry or a deep golden pocket fib retracement. But more often than not, you'll find that price does react pretty aggressively to this level that we'll just call 50%. So I want you to go ahead and take your fib tool, go to your prior day range, and you're just going to mark out specifically the 50%. You don't need any of these other levels for what we're discussing in this video. I'm simply just breaking down the exact trade that I took that made me about $1,000 before I even woke up for the following day. Look right here. We'll open up the charts. We can see that if we first, let's go ahead and remove this one right here. We're going to look at the open of the week. So we have the 6 p.m. right here, Eastern. This is the weekly open right here, this opening price. We'll actually mark it out so you guys can get a good visual of what we're looking at. The weekly open is going to be here in, we'll just do it in orange. Make it nice and bold. This is the framework for my trade. I saw that we pushed towards this previous swing high, which also aligned with the 50% of the previous daily candle range. What I was looking to do was short into this area. I was looking to get short into the 50% because if my thesis is that we are making lower highs on a time frame above my entry, then I can look to short in something around here. Now, it goes without saying, this wasn't a trade that I got on the first attempt, but I wasn't overly committed in any specific instance. And as you can see, even if you did try it here, it didn't work. But if you gave it time, it worked flawlessly. And I'll show you the exact executions that we took, the trade that we took, and ultimately how we were able to make the $1,000. Now, looking at this, you might be saying, oh, that's good and all, but you have to ask, why is price stopping here? What is the point of it stopping here? It's a simple logic. If you have a distance that you have to travel, the middle of it is really going to denote or mark that dividing line. Our bull is going to step up, our bear is going to hold it down. And as you can see, it gave us a decent reference point for a lower high to form. This is something that you can mark between the previous day's high and previous day's low, almost any single given session when you notice a swing point form. That's an important piece of info. Remember that when you're looking at a daily chart, you always want to trade away from the most recent swing point. Just to give you an idea of what I mean. When we look at this daily chart, if I assume this is going to hold as a swing high, this next candle closes right here, that confirms it. So following that, we have this candle that drops down to the previous day's low. Okay, Why would I want to immediately trade back to here if I've already seen it make a big move and we know that price will tend to want to pull back, even if it is going to make a higher low right here? Does it want to do it right here, or is it going to maybe want to dig a little bit deeper? I have to entertain the idea that it might want to push down a little bit. Now, we'll go and show you my executions. My trades were pretty simple. I'll give you a rundown. I took a couple entries on the short. I tried for the long. Once I saw that it started to climb above my equilibrium, was able to kind of make something, but it was really on the back half of the short where I got the trade. Now, for the session, 4.4 profit factor. So there are some paper cuts in here, some losses. You can see, we'll look at some of the losses in the beginning, show you what worked and didn't. This trade right here, I was looking at the idea that we were going to break below this swing point right here and then go for it because we were at the equilibrium that we talked about, and it simply didn't work. It instantly ticked me in, stopped me out a couple candles later. Cost of doing business, I'm risking $80 to make quite a bit. I was planning to aim for down here, which we ended up getting. Now you can see through the rest of these executions, just little bits, right? I was able to nibble on the long right here. A short again didn't work. And then this is where the magic really started to happen. Now, these are mostly the same trade. I took an initial position here. I'll show you. Basically nailing the top. Basically nailing the top. What I had seen was this. I was in the long from this to this up. Worked well. I saw it kind of push down and try to sweep in here. So I was trying the long here for the highs. Once I saw that start to invalidate and fail, I was looking at this as the flip point because we had a gap right here that we could invert. We had a gap right here that we could invert. And ultimately, my framework was that if we were not going to run these highs and continue to make higher lows, we were then going to start to trade towards the midnight, into the midnight open, towards the open of the week. So we can see that we get to midnight a few hours later. I basically get stopped out right before that move happens on the core position, which is fine. I was willing to take the stop, but what I saw that I missed in real time, just a couple minutes later, I saw that we were actually testing VWAP, which I found to be very, very, very important heading into the specific time of day that we're looking at. So when we pull back into VWAP, that's when I had to ask myself, am I willing to re-enter and just have a tight risk point, maybe use a little bit less size so that I don't give back any profit? And I was willing to risk it. So this is the final trade. We have this one right here. All of these three are actually going to be the same trade. All of these are the same trade. I just added to the position. So I'll show you right here. We'll just add them together so that we can see that this is in fact actually an $800 trade. We have the initial entry right here on this pullback to VWAP, and we can actually pull up VWAP so we can see how the execution compares to VWAP, and I'll show you exactly where the stop was as well. Let's see, where's our VWAP? Should be somewhere. Maybe not. Either way, you can take my word for it. VWAP's right about there. I put my stop at the high. My initial risk was $30. Yeah, 30 bucks. And when I saw it bounce aggressively right before running the weekly open, I added here. I tightened my risk and I was going to make money regardless. So I might have risked $30 here and I might have risked another $30, right, for the open profit because the stop was quite literally right on the nose of this. And I was able to bank a net of 50 points, but you can see that we actually traded from 860 down to 790 in terms of our best and final. So this is the trade logic that I used. Very simple, very straightforward. I find these trades to be super easy when you have a bias in mind. Now, how do these levels compare to what we were looking at on the higher time frame? You can see it really clearly right here. We have our 50%. We ran above. We had a little bit of a gap right here, a little bit of an order block, right? So it's forming a lower high, but we got short essentially on the flip point of that. So we're able to trade back down to the lows, and ultimately we caught this nice expansion right ahead of all of this chop. This was such a clean cut move that I knew coming into the New York session that I wasn't going to be interested because we got this nice push lower. And if you know anything about how sessions typically work, if one session happens to be really clean, in this case it's London, New York might not be. It usually doesn't give you both. It will give you one or the other. And typically in summer months, it tends to be a little bit cleaner in London sometimes. So you might find me dabbling in these types of opportunities. But regardless, just wanted to come on here and share with you the trade that I took, showing you that we are in fact up now 2,000 bucks on this account. We just started last week. Remember, We had a bit of a blow up on one of the other accounts, so we started this fresh one. And now we're just going to walk this through the process using top one futures. You could use my code if you want, if you're interested. Instant funded accounts, code DTA. But with what we have here, this $2,000, we work this all the way up to about 5K, and then we'll be able to take our payout for 2,500 and then still have a good buffer in the account. So that's the game plan for this. I'll walk you guys through the process. If you're interested in trading with me or alongside me, I will be trading live on YouTube a few times this upcoming week. And ultimately, if you want to get in touch with me, join the Discord, link down below. Follow me on Instagram, and we'll talk soon. Take care. Hope you guys learned something. And if you did, share it with a friend. It goes a long way. Thank you.